It is presented by Ronald Kleverlaan from CrowdFundingHub. We have planned approximately 1 hour for the webinar, and there should be time for the questions at the end of the webinar. Also, please note that this webinar is being recorded. Okay, I think we are ready, and Ronald has prepared a very interesting presentation for us, and I am already waiting it. So Ronald, the floor is yours.
Okay, now I'm unmuted, I guess. So now can hear me. Thank you, Laurie, for the introduction, and welcome everyone to this first webinar, internal webinar. I'm not sure how many external people are in the list. I just checked and I saw a lot of familiar names, so I guess we have a lot of internal consortium members here. Very interesting. I have a full slide deck. I have a lot of things that I want to discuss and want to introduce. Some of them perhaps are a bit familiar for people that have seen me speaking already before, or of course we met in some consortium meetings, but I want to discuss all these issues because then we are on a similar pace with each other, and then we know, give a good insight in what's happening nowadays in Europe in general. And I introduced as crowd investing in Europe, but of course it is also mostly focused on alternative finance, the current trends and developments. If you have any questions, please put them in the chat box. I cannot directly see them, so I sometimes have to switch my presenter screen to the chat box. So, but if you put them there, I will several times I will check and I will answer them. And I will make sure that at least at the end we have at least 10 minutes for Q&A. So to get started, we talk about alternative finance in Europe. We think that we are doing a really great job and that we are growing really fast. But in fact, 85% of all the alternative finance market is in China alone. There is in 2016, there was already more than $200 billion euros was distributed through all alternative finance platforms. A lot of it was consumer lending, so that's a bit different than in most European countries. But even in the US, it was also much bigger than in Europe. Just to put it in perspective, so we think that there is a huge potential here. We see that globally already what the potential is of alternative finance. But we still are really at the beginning of alternative finance in Europe. If we see how big the alternative finance industry is now, the final numbers of 2017 are not published yet, but I know that it will be around 10 billion euro that being distributed through alternative finance in 2017. Of course, this year it will be 20-30% even more, so 12 to 13 billion euro. But it is not evenly distributed throughout Europe. We all know that the UK market is by far the largest market. 70 to 75% of all the alternative finance in Europe is being distributed through UK platforms. That industry started also a couple of years earlier than a couple of the other West European countries, like France, like Germany, like the Netherlands, for example. But you see that in Southern Europe and especially in Eastern Europe, most of the alternative finance industries, these ecosystems, are just getting started. Just a couple of million euros being raised there. And why is this important? If we zoom into the UK market, it's interesting to see that over £6 billion already was raised in 2017. That's a year-over-year growth of 35%. So all these years, so the percentage of growth, of course, is slowly slowing down, but still with 35% growth, it's still a lot. But what makes it these numbers only make sense if you put them in perspective. And the most interesting number I found, if you put them in perspective, is to measure them and show how much money in general is raised by SMEs in a country. And so peer-to-peer business lending, so where the part of alternative finance where SMEs are raising funding through an online platform to marketplace lending, peer-to-peer business lending, is really big in the UK. And if you compare it to the total number of loans being distributed in the UK to all SMEs, almost 10%, 9.5% of all these loans are distributed through these online platforms. But if you zoom in a bit more and you look into small businesses, because the large businesses most of the time still have a good opportunity to get a bank loan. But if you look into small businesses, almost 1 out of 3, so 29% of all these small businesses in 2017 received their funding through an online platform. So this is not just marginal, the 1% startups, the small companies trying to raise funding. This is already a large portion of this whole industry. We zoom into for example, also for equity financing, equity crowdfunding. The big equity crowdfunding platforms in the UK are already the biggest providers of seed funding and venture capital funding in the UK. So the VC funds, individual VC funds, are smaller than the largest equity crowdfunding platforms. So that makes sense, gives you a bit of an insight. But if we look into alternative finance and want to discuss alternative finance, there are more than a dozen different types of alternative finance available. And not even speaking about the number of financial providers that are available. Hundreds of them are there, scattered throughout Europe. And when traditional finance is still very simple for an entrepreneur, for a shop owner, for a company, you either apply for a loan at a bank, or you reach out for equity financing, for growth capital, at a venture capital firm or a business angel. Nowadays, there are a lot more opportunities out there for companies to raise funds, but of course, it makes it also much more complicated. The whole ecosystem, the whole landscape is much more fragmented. I already mentioned the business lending, but also, of course, social impact bonds. I will go into detail of these different types later. Equity crowdfunding, business angels. But does you focus on the new online models like security token offerings and initial coin offerings? These are growing really fast. Some of them are a bit more too innovative, based on the blockchain, but they will change this industry of finance of SMEs in the near future. I'll quickly check if there are some questions already in the webinar. No. Okay, very good. Continue with it. All this fragmented landscape gives a lot of opportunities for other types of companies raising funding. Faster growing companies are raising funding, but of course here is also a lot of complications to raise the funding, because how do you know where to go to? So these are things that are big challenges nowadays in this industry. And to zoom in on a few of these examples, this is perhaps the most simple version. This is the peer-to-peer business lending, the marketplace business lending platforms. For a company, it looks like a bank, but just then an online bank. You just apply for a loan. There is a credit committee checking the checks and balances, checking your business plan, and depending on your risk profile, there will be an interest rate set, and either you will get the money directly because they have agreements with banks, with pension funds, or even the European Investment Bank is partnering with a lot of these platforms. You will be within a day or within a couple of days, you have received your funding. But of course, it can also be private individuals that are investing through these platforms to individual companies. In fact, these are the modern banks. This is a digital online bank. Sometimes they even apply for a banking license formally, most of the time also to attract cheaper capital from the capital markets. But this doesn't really change that much for an entrepreneur, but the most important thing that changed here is that the speed is much quicker. You don't have the bureaucracy of a large bank. You have to wait for weeks to get an answer on your when you apply for a loan. These fintech companies are much faster, and they are growing, therefore also really, really fast. Example is Funding Circle, a UK company, but also operating in Germany, in Spain, and in the Netherlands. They raise more than, or lent more than £4 billion already to more than 40,000 businesses. This is for a financial player in the alternative finance industry, one of the biggest ones. Perhaps one model that is well known, most known to the general public, is crowdfunding. I still noticed that a lot of people still have missed some insights about how crowdfunding really works, because the crowdfunding word is so popular that everybody uses it for all types of raising funds. But what the power of crowdfunding is that you are connecting a community of investors. So these are people that believe in you as a founder, as a company owner. They don't see it just as an investment opportunity, but they also want to show the social impact, or they want to support the entrepreneur directly. There is the real motivation, and there's the real power of crowdfunding. So you need to have an involved community. It's not like the peer-to-peer lending or the marketplace lending, where there is an investor far away putting some money in hundreds of different companies. These are involved investors that know about you, that know about your company. And that's also the power, because it creates a lot of marketing opportunities, but also some market research opportunities for you as a company owner. To give an example, this is a wind farm in the Netherlands. We raised with more than 1,000 local investors, so people that are living in the neighborhood that knew about this project, setting up their whole own clean energy project, in total enough money to build the 18 million euro wind farm. And they are 100% owner of it now. And if you move on, we have, of course, there's always been a lot of business angels helping companies to grow. What we now see is kind of a digital age of business angels. So they're using online platforms like Syndicate Room. This is one of these platforms, to form a syndicate, so invest together in fast-growing companies. There are a lot of advantages here. One of them I want to mention is that you standardize the whole investment process. So the contracts are standardized, the agreements with the entrepreneur are standardized, collecting of the funding is done automatically. So you don't have to go to all these to the notary to create a contract and to formally invest in the company. This speeds up the process a lot. And the advantage of these projects or these platforms most of the time is that not all the companies raising funds want to be exposed to the general public. So they don't want to use crowdfunding where everybody can see their business plan, their numbers, but they can pitch it directly to a dedicated group of investors. One a bit more complicated model are social impact bonds. The idea of social impact bonds is to help governments to invest in social projects, but only pay based on the outcome. So outcome payment models. You see that most of the time, non-profit organizations that want to take over some government activities, or They want to change. Then they have a project to make a change in for society. They normally either get a grant from the government, but then the government doesn't have a control on what happens with that grant, or they have to raise funds from private individuals, mostly as a grant, as a donation, and that's really difficult to raise a lot of funds. So the social impact bond, the idea is that it is an investment, so investors, private individuals, but also impact funds, impact investment funds, they put some money in a project. The project is run by the nonprofit, but there is a guarantee from the government. Then when the nonprofit will reach certain milestones, certain KPIs, that they will pay for the outcome. And with that payment at the end of the project, and that most of the time that is also, it reduces costs for the government. So less unemployment, for example, that will make sure that the government also has lower costs. They will repay the non-profit, and they will, with that, the loan or the investment to the investors will be paid. Okay, still no questions. Please, if you have some questions, don't hesitate. I will check for it. But of course, in the industry, we still have these venture capitalists. The venture capitalists, they see also what's happening in this digital age with these new alternative finance mechanisms. And there is also a lot of blended investment. For example, venture capital investment combining with crowdfunding. A great example of it is Monzo. Monzo is itself, it's a fintech startup. It's a new online bank. Very popular, growing really, really fast. And in 2016, they did a venture capital round, raised £7 million. But at the same time, with the same valuation, with the same rights, they reached out to the crowd, potential users of their banking system. And they raised £1 million with it within 96 seconds. So wasn't a long campaign. Preparation was long, but when their campaign was live in 96 seconds, they raised the £1 million. A year later, in their next funding round, they raised 22 million from other venture capital firms. Again, they combined it with a 2.5 million round at the crowd. Again, same valuation, same rights. This year, last month, they did another round, raised £85 million. The company is now valuated more than 1 billion, so they are a unicorn now, one of the fintech unicorns. At the same time, also raised £20 million through crowdfunding, through equity crowdfunding. So you can see on top, there were 36,000 investors involved there. And the innovative model that they're using here is that they are live now. They are a bank, but they are a bank. They only have an app on your phone. So all your banking activities are done with the app on your phone. With that app, you were able to invest directly in this round. So it was really one click away to invest. Makes it very user-friendly, very quick. And as you see, more than 36,000 people were interested in it and invested. And this funding round only had a duration of 2 days. Then the 20 million was the maximum that was raised. For the individual investors, of course, the venture capital firm, but also for the crowd, it was also a very lucrative phase these 2 years, because the valuation in 2018 was already 40 times higher than in 2016. So this is a typical high growth company with high potential returns, what traditionally would only be benefited the venture capital firm that would invest. Now you see also the end users, the crowdfunding users, the crowdfunding investors, who are also able to receive that valuation, and of course, therefore, also the additional creation of wealth. A totally different model we see tipping up now everywhere in the world are organizations focusing on factoring or invoice financing. Traditionally, this was normally done by setting out or all your complete portfolio, all your invoices. But nowadays you see also, because of fintech, because of this the fast tools that are available, that you can sell individual invoices. So sometimes that can be very useful for a company, just needed to have some quick financing, some quick cash flow, selling off 1 or 2 invoices that would normally have a 30 or 60 day or 90 day payment date, and now you get it instantly. Will relieve a lot of companies. And you don't have to go to your bank, you don't have to send in a longer process. It's just an individual invoice that you can receive the funding for. And traditionally we were talking always about you have a loan or you have equity funding. But another opportunity, of course, are profit sharing models, where a company is promising you, when you invest, that you will get a certain percentage of the profit. Most of the time it is capped to a certain level of return. For example, this company, if you are an early investor, you can get a max of 5 times your contribution, still a 500% return on your investment. So still very interesting. But sometimes even not. Then for a long time you will get a certain percentage of the profits, of the future profits. A lot of innovation going on there. And if you talk about innovation, we should also mention, of course, the developments in the blockchain industry. We see that companies, this is a company, Desico from Lithuania, they create an online platform. It looks like a crowdfunding platform, but raising funding through security token offerings. And in fact, security token offerings are the digital forms of equity crowdfunding. So connected to the token, there will be a security. That security can be traded. That security has certain rights, either voting rights or revenue rights. And that enables the company, that enables these platforms to distribute these tokens, these security tokens, much quicker than normally when we have to go to an offline notary, for example. So the cost can also be much lower here. And for specific industries, you can take it even a step further. This is WePower, a company from Estonia. They have how they call it, a green energy trading platform. On the blockchain, they use smart contracts that if you invest in certain green energy projects, renewable energy projects, it's kind of a pre-investment for the energy that you want to use afterwards. So that can be wind farm, that can be solar energy, geothermal energy. And you already invest in it now, and that means that you have a lower price using that energy in the later stage. If you compare it with crowdfunding, it's like reward-based crowdfunding, but of course much more quicker. And the advantage here is it's also tradable. So if you move or if you don't want to use it anymore, it's a security, you can trade it. So there's a lot of discussion, of course, going on about how to regulate these security tokens. Should there be a separate regulation coming from it, or is that, or can we just include it in the traditional financial and legal framework that is available? Let's see, future check again. So, okay, question is, how does Monzo work? The setup in the platform, companies already invested by VC? Yeah, so indeed, Dimitri, thanks for the answer. So they use the crowdfunding just as a marketing tool to have a buy-in indeed from their customers. So they didn't need really the additional money from the crowdfunding crowd. They had enough money from the venture capital firms already, but this is a kind of a buy-in of these 40,000 people that invested. They feel partly owner of the company there. So so the next steps about future development. So what is happening nowadays, and what will be the trends for the future? What we already see now, I gave some examples, but I'll go into it a bit more deeper later. That alternative finance is not just for the startup. It's not just for the small companies just getting started and are not able to attract funding from a bank, for example. More and more traditional companies see the potential of alternative finance and are actively using it and bypassing banks for several reasons. That can be for speed, it can be for flexibility, that can be for lower costs. There are so many opportunities out there, but that's also the biggest risk now. So that's the second trend. We get a really fragmented financial landscape. It is not that you go to a bank anymore and your account manager will help you with some leasing, with some factoring, with some bank loans. You will have dozens of different types of financial intermediaries and financial suppliers that all offering different types of products. So that brings a lot of additional challenges in the next 5 to 10 years in the alternative finance ecosystem. We see a lot of co-funding or blended finance, what I showed already with venture capital and crowdfunding, for example. But you see that also bank investments are combined with crowdfunding or with other types of finance. So it will be much more normal in the future if you are raising funds as a company that you're not applying it just with one financial supplier, but it will be a kind of a blended offering. Some equity financing from a business angel combined with a crowdfunding loan or with some factoring and topped off with a bank loan, for example. And for this, there need to be a new category of financial advisors or SME advisors, trusted advisors that will help companies in this financial landscape, in this fragmented landscape, and coach them and support them with this. So it's not just for the small companies. I showed some examples before already, but this is another example I always like. Perhaps it's because of beer. But this is Brewdog. It's a UK company. They started rather small. They did in the last 8 years several equity crowdfunding rounds. In total have now 42 different small investors in the company, raised more than 25 million in equity from them. And only last year, at the first time, accepted a private equity or venture capital firm to invest in the company. At that moment, the company was also valuated over £1 billion, also a unicorn. Of course, nothing fintech. This is just a traditional brewery, but with a very strong marketing power, and they're using that crowd, these 40,000 people now, as ambassadors for their brand. And they have a membership card. You get discounts in bars if you buy Brewdog beer at these bars, and they will grow really, really rapidly. But also in real estate, we see alternative finance coming up. This is a big example in Colombia, for example, just to show that it's also happening outside Europe. In Bogota, the capital, there's a big, the highest building there, the BD Bacata. The funding therefore mostly is raised by retail investors. They raised $150 million to build that skyscraper, residential skyscraper, and it's almost there. So it is being built there. So it's not only small companies that are using alternative finance nowadays. So the multiple funding rounds, I'm going quickly through it because I gave some examples already, but also this is something that can be done also by small companies. So this is Pebble, a company that wanted to raise funding through crowdfunding. They use Kickstarter as a reward-based crowdfunding platform as a start. And the plan was to raise $100,000 to start the first production run. But at the end of the campaign, they raised over $10 million. 60,000 people supported the idea. This is a digital watch. Nowadays, it's rather normal. You can program your watch. You have a different front there. Apple has it. All the big manufacturers has it. At that time, they were very innovative. There were no other companies doing that yet. So a lot of people wanted it. And because they saw it was such a success, when a year later, they did a follow-up round. They raised more than 20 million dollars. And even with a third round, they with pre-sales only, so no dilution, no equity being sold, no loan that need to be repaid, just pre-sales. They raised in the other last time also almost $13 million. This is an example how you can use, in this case, a reward-based crowdfunding as an alternative finance solution to launch new products in the market. If they only raised $100,000, it was still fine for them. They didn't have to raise a lot of additional funding for going to the factory to build it or for marketing campaigns. This is a market research tool. They knew about how big is this industry and how fast can they and should they grow also. And to link it back to blended finance, when you show to venture capital firm that you've raised 10 million or $20 million in pre-sales, it's much easier to convince them to invest also in equity in your company. So this is also happening a lot. So if we talk about, we show some interesting stats, but also we saw that there are big challenges and big differences between Europe and Asia, Europe and US, but also big differences in Europe itself. So what are the biggest obstacles for growth in this industry at this time? First and foremost, it is still a very immature and a very young ecosystem. We are just getting started. The biggest platforms out there also only existed for 5 to 7 years. So they didn't go to the full financial downturn and the full financial cycle. Most of them started after 2008. Now, after 10 years' time, of course, in 2003, 2013, 2014, we had some difficulties in the financial industry, but not that big as in 2008. So what will happen with this industry when we really get a recession? There will be some recession coming up, but also how can this industry work together with all these fragmented different types of organizations? A regulator needs to regulate this. How are they going to adapt the local regulation to it? So that is needed also to grow this industry. We need to have good financial regulation. But of course, the difficulty is what is good and how to, you cannot, the regulation that is good at this moment is not the same regulation that is good in 5 years' time or in 10 years' time. So this, how do we grow the financial regulation together with the growth of the ecosystem? In general, and that's the whole idea, of course, about the Altfinator program, there is a lack of knowledge about alternative finance at the entrepreneurs and companies, but of course, also at these advisors. I think I heard some. Okay, good remark about how do you manage 40,000 investors in shareholder decision-making procedures. A very good question, Francisco. Just quickly to answer that, the main, so how they typically do that is you don't have as 42,000 investors individual voting rights. So you will create an SPV where all the individual investors are grouped together, and then you have one shareholder holding all the economic rights of the investment and not the voting rights. That's the typical way how that's being organized. Some organizations and online platforms also give voting rights to that SPV, and then either from within themselves, they just nominate someone to execute these voting rights. And the second question was, what are the differences between investor protections in the different countries in the EU? That is something I think out of scope of this session, because this is a really complicated question. There are indeed a lot of differences in Europe. Some countries are really restrictive about the potential for investors to invest through online platforms, so are really open. And to give a quick answer in how to fix that, one of the possibilities for that is fixed by the new European pan-European crowdfunding regulation that's being introduced and being discussed now at this time between the European Commission, the Econ Working Group, and the European Parliament. The idea is that by summer of 2019 there will be new regulation, and that will be automatically applied throughout all European countries. So it will overrule national regulations. So there's now the big debate if that's possible and that's acceptable for all the national governments and the national regulators. But this way, the European Commission tries to enforce that there will be harmonized investor protection in all European countries. As a short answer, because it's too detailed to go to all the different questions, all the differences between the countries. So these are the biggest obstacles. We did a big research ourselves 2 years ago about what is now happening in the different countries in Europe to promote alternative finance. How is this ecosystem developed? And we noticed a very strong correlation between the higher the countries were on this list. So, and this is how mature this industry was. Also, the higher amount of money being raised in these countries. And I'm not going into all the details, but there are two main groups that are influenced there. We have just the industry participants, so the market itself, and we have the government that can play and can change some of these elements in this ecosystem. And it was really clear it takes two to tango. So it really you need to work together. Like I mentioned, you cannot put in regulations at this moment that are exactly the same as in 10 years' time. And we used the growth model for that to see how we can measure it and how we can help industries to mature and grow from the seed phase really to a mature phase of this industry. And we call it the alternative finance maturity model. 5 different phases. You go from an introduction phase where the first platforms are just popping up and experimenting in kind of a sandbox, all the way up to competition and consolidation, and finally a maturity, when in 10 years' time we don't speak about alternative financing anymore. We just speak about SME finance, and bank financing and crowdfunding and marketplace lending are just individual parts of that. And what's needed for that? So good financial regulation is needed. I already mentioned it. And I saw already the comments about investor protection. Sure, that's very important. But on the other hand, access to finance. So the more you protect the investor, the less capital is available, so less access to finance for the entrepreneur. And there you need to balance as a regulator. So how professional are these new companies coming in this market? Most of them are just startups themselves. How are they financed? How sustainable are they themselves? How strong are they? The discussion about what do you want to regulate on a national level, or what do you want to regulate on a European level? For example, the UK and the German market, it's now possible to raise up to 8 million euro in individual campaigns. The proposal for the European regulation is also now that it's going to be 8 million euro. Then suddenly everywhere in Europe, every company can raise up to 8 million euro. there are a lot of experiments going on with sandboxes also. I show a lot of details on this next slide, but I want to quickly go through it because of the time. I'm not going to discuss all of them. But what you see, if you are going from the first phase to a later phase, how can we help a government with that? You need to have an open dialogue with this industry. So don't shut the door and just come up with ideas yourself. Speak with potential industry players, speak with experts from other countries, speak with regulators from other countries to see how to implement it. And these are steps that in every step of this industry, you can tighten the regulation, but don't immediately close this industry. And of course, there the Altfinator hubs comes into place. They can play a crucial role here by helping out that these regulators taking the right steps, speaking with the right people, and also taking the right steps that are needed to grow slowly to the next phase. And just to also, we're talking about the UK market as being an example how big this industry is. But even the UK market is still in a competition consolidation phase. So they still need to grow a lot before it's completely integrated and accepted in the financial ecosystem. And if you talk about the lack of knowledge for entrepreneurs and companies, there's of course a very strong role for the industry itself. So there need to be a lot of promotion and education being done. It can think about educational programs. They run by industry players themselves. You can have training sessions. You can have governmental sponsored programs. But we need to educate all these different stakeholders in this industry. But to do that, most of the time you also need to have data, because you have a strong competitor here. You have the banking industry always trying to push back. So you have to show them, either based on national or international data, what is happening. And so, for example, the situation in the UK, where now 30% of all the small SME loans are being distributed by alternative finance platforms. There's a very strong statement you can make in the media that you can make when you talk with politicians. But it also means that you need to be transparent. Biggest question all the times is, these new financial firms, do they know how to evaluate risks? So how is their default percentage? Do their investors make money? Do they make the right decisions there? And it can also mean that you create certification programs in a country, either for the platforms, so kind of a token of approval. This is a good platform, knows how to work, but also for the financial advisors. As a company, you need to have help to find your way in this fragmented landscape. Who can help you with that? And all these programs, either research or educational programs, certification programs, that can be financed by the government, but even by banks, because sometimes it's also for them very interesting. But also on the other hand, you see that there was a good example in the UK. The British Business Bank put a lot of money available to co-invest through these new online platforms. And by providing these funds to these platforms, it helped build them credibility, because the National Bank was providing funds through the platform. But of course, it also created additional access to capital, because there was more availability of capital this way. And getting back to the alternative finance maturity model, here the same. You can start with roundtables, again, work with independent advisors, all the way up to the maturity of the industry, when you have specialized research centers that are completely independent from the industry itself. And again, of course, as Altfinator Hub, here we can also play a very strong role. So last but especially not least, how do we make sure that the SME advisors get more knowledge? And I want to reflect on some research that we did in the Netherlands, specifically on the role of trusted advisors. The first thing was very clear. There is a lack of experience with the traditional SME advisors. They either are former bank employees, or if they are advising on financial data, they are only experience. They have only experience with bank financing or with some private funding from business angels, but that's it. But there's also, one of the findings was that it's also difficult for them to create a business case because of that fragmented landscape. It's really difficult for them to find, to sell enough hours to do a proper research. So that's a big challenge, and there's not an easy solution there. Because it was for them also difficult to find the right alternative finance providers. So if there is not a certification standard, how do you know which of these 100 different providers is professional enough? You have a duty of care there to your client. On the other hand, it is also for the companies itself difficult to find that trusted advisor, because there is also not a certification or something else for that. So you have to ask around if someone knows someone who has experience in it. Of course, came out there's a lot of education and training needed, and with training and education, you also talk about certification to have kind of a trusted advisor certification. So I'm almost at the end. I have 12 minutes left. So to conclude and to wrap up this session, and then I'm checking out of the other questions. And if possible, of course, you can also ask questions later. So in general, alternative finance in Europe is growing, and is growing rapidly. Every year we see that it's at least for 30% a year growth, and we see it almost in all the countries. The interesting thing is that while the UK started as first country, some Western European countries started a couple of years later, but they have kind of the same growth rate. So, and a couple of years later, again, countries in Eastern Europe started or are getting to start with it. And we can expect the same growth rate. And now we're really zooming in what's happening now. But if you look at it on a longer term perspective of 10, 15 years, you will see that everywhere in Europe, we will get this growth, and we will see that alternative finance will play a major role in financing companies. Either it's innovative companies, but also traditional companies. We still have, and we will keep a fragmented financial landscape. It will not be all back to a few banks or a few crowdfunding platforms. There will be specialized organizations coming up. That means that there will be a growing need for independent trusted advisors. How they're going to market themselves, how they're going to position themselves will be different in every country. But you see that in all countries there are advisors are looking into this business opportunity, setting up specific agencies for it. But they are struggling also. They are finding their business model, the right business model, enough clients there. In general, the maturity model, we see most of European countries are just at level 2. We need to grow this industry, and we need to do that together with regulators, with the industry. So in the industry, people need to work together. Don't fight each other, but work together to build a bigger financial ecosystem, a better financial ecosystem. And last but not least, and that's, I think, one of the key points here, these Altfinator Hub models, the model that we've talked about within Altfinator, they can really play a crucial role here, because here we can combine all the knowledge that's available out there, best practices that are available, try to replicate them in countries, speak with regulators as an independent body, speak with the industry, support the launch of industry associations or support these industry associations. I think that's something that we can work on. For people who don't know it yet, I have you see here weekly alternative finance newsletters. It's more bi-weekly, where I try to publish best practices and new insights on alternative of finance, and you can register there at altfinance.eu. So thank you for your attention up to now. I see we still have 9 minutes. I'm going to check the chat box for questions. Let's go back. Yes. Okay, so just to, Michael, just to confirm, please, the regulation you mentioned is expected to be implemented in summer 2019. Not really, sorry for the confusion. So the discussions and the negotiations within Europe are now taking place. The expectation is that that will take a couple of months. So it will indeed be finalized by the summer of 2019. That's the current expectation. But then there will be a 12-month window for national regulators, for platforms to adapt and to apply for a license. So the expectation is that in the summer or just before the summer of 2020, the first platforms can operate under this new license. So that is the current expectation of and this is specifically crowd lending regulations. So it doesn't cover, for example, initial coin offerings, security token offerings. There was a discussion to include this currently in this model, but it's taken out because it was too complicated at this time to convince also all the people at Parliament to include it. Makes it too complicated. But there is a separate track now getting started to do exactly the same what is now being done with crowd lending, to do the same with security token offerings and initial coin offerings. But yeah, likely that will take 1 or 2 years more. Given that the alternative finance ecosystem is still immature, why use a growth model rather than a hype cycle, Gartner cycle? A very good question, Dimitri. The reason is, of course, we can plot it on the hype cycle, and it's, by the way, rather interesting. So perhaps we should also do it. And then you will see that the different alternative finance elements are also in a different phase of the hype cycle. While crowdfunding most of the time is a bit more well known for the general public, it's already moved away, further away in the hype cycle. Initial coin offerings are already down with dissolution, because everybody thought about ICOs are quickly able to raise a lot of money through its cryptocurrency. Was very successful very shortly for 1 year. Now everybody's going back and trying to figure out how you can still structure an ICO that is still offering real value to your investors. So they will need to climb up again there. But the main reason is that the hype cycle is only giving a specific point in time now where we are, and you want to support government, you want to support industries, to move on to a next level. And moving on in the hype cycle doesn't really make sense in that case. You want to make sure that the industry becomes more mature, and that is a step-by-step process. And of course, there are hypes involved there, and perhaps we can see if in the beginning sometimes the hype is sometimes too high to really help an industry to grow, because the expectations are too high. But you still need to work together with people in the industry that know what's happening and how to build the rest of the industry. Just like in the ICO market, in the blockchain industry, there are always people hard working to make sure it's structured way of raising funds, but sometimes they are overheard by the people that are speaking out very loud and doing a lot of promotion there. So what is the best way to support the growth phase? Introduction phase. In the introduction phase, from what we see is that the best thing is an open dialogue. For example, for the regulator, make sure that you don't put up a lot of restrictions. If there are restrictions, try to limit them specifically for these new providers. That can be a sandbox, for example. I see the second example. We have seen sandboxes in the UK, in the Netherlands, where you get a very close interaction with the regulator. You get sometimes exempted from some regulations if you are operating within the sandbox. That gives a lot of additional flexibility for the new entrance players, for the new providers. And from the industry, it's very important. I always mention it to be positive. So don't overpromise, but work together. So everybody in this industry, in the introduction phase, has the same problems. You have to create credibility of the industry. So it doesn't help if you are going to fight against your competitor, and so you have to work together, especially in the first phase of this industry. Yeah, indeed, Dimitri, the UK regulated sandbox is most used indeed. I know there is also an EU program focusing on fintech and focusing on sandboxes. I'm not sure exactly what the status of it is, but the idea was that the best practices and examples will be replicated from the UK, for example, will be replicated to other countries in other member states. So it can be interesting for us as Altfinator Network and for later as Altfinator Hubs to see who's leading that consortium and how we can connect also with them. So Dimitri's question is about the theoretical framework to guide us through understanding, interpreting these interesting trends. What about an evolutionary approach? And going to quote model. Very, very good. Yeah, I like that, Dimitri. Let's take this outside this conversation because it becomes really detailed already. But I think this is something that we can work on, because this is the maturity model is a very simple model, a very first step, but that needs to be improved and needs to have some more theoretical basis, and that's something that we can include in it. Okay, so this is the last question I have now in the chat box. If anyone else want to ask, we still have 1 minute left, and I think that people are tired, want to go to lunch or have other appointments. If you have any questions, please ask them in the chat, or perhaps I think you can even ask them directly. So, okay, thank you. You're welcome, Dimitri, Robert. Okay.
Thank you. I think we can wrap up now. Thank you for this very interesting presentation. I really liked it. Good job. I think that all of us now have a better overview of this complex topic. And also I would like to thank the audience for and actively participating with interesting questions. As Ronald mentioned, our time is up. And next webinar will be held at January, and we will send out the information when time is right. Thank you again, and bye.